Welcome to this sell-off day. I'm about to unveil how the bears took control of the market right from the opening bell, triggering a significant sell-off. This past Thursday etched a somber record as the Nasdaq experienced its gloomiest day since August 2nd. As we delve deep into this market downturn, remember to hit the thumbs up button and hit subscribe to stay tuned for an abundance of insightful content. The trading session witnessed a downward spiral in the shares of major tech giants. Amazon encountered a 2.7% loss, Apple dipped by 2.6%, and Netflix saw a substantial drop of 4.8%. The Nasdaq 100 Index, a collection of the 100 most influential and heavily traded companies on the Nasdaq Stock Exchange, echoed this plunge, sending shockwaves into the US 100 Index. In today's analysis, our focus is on the 5-minute time frame. The initial candle paints a bearish picture, often referred to as an elephant bar by some traders. A clever approach here is to initiate a sell order right after the closure of this candle, placing your stop loss just above its highest point. From there, trade management follows your chosen risk-reward ratio. In this specific sell-off scenario, the risk-reward ratio stood impressively at 6-to-1. It's paramount to remember that when the price slumbers beneath the 200 exponential moving average, our radar is tuned to scout for predominantly sell-oriented setups. But wait, there's more. Another golden opportunity to hop on the sell-off wagon emerged during a minor pullback, characterized by a hanging man reversal pattern. When this pullback spectacle graces the scene, a strategic entry point is signaled as the subsequent candle breaches the hanging man's low, as beautifully illustrated on the chart. Trading during the first 2 hours after the market opens has several clear benefits that can significantly improve your trading results. This time frame sets the sentiment for the day by showing how the market is starting and where it might go. This makes it easier to choose trades that match the current trends. Additionally, trading during a specific window allows traders to concentrate their efforts and attention on the market for a shorter period. This can be advantageous for those who have other commitments or who prefer not to be glued to their screens all day. I really hope this video helped you get the hang of dealing with a sell-off day. Your support means a lot to me. If you found this content helpful, go ahead and show some love with those likes. And hey, don't forget to hit that subscribe button so you won't miss out on more awesome stuff like this in the future.